All right, good afternoon, everyone. You are all welcome to the first in the series of sessions being organized by the UK GCC in collaboration with KPMG. Today's session is on ESG considerations and why it matters. My name is Kenneth Ejidia. I'm a Deputy Manager with KPMG's Governance, Risk and Compliance Services. I'll be your moderator for this session. Why are we gathered here to discuss ESG? And I believe quite a number of people have heard ESG in different areas. The good thing about ESG is we live and work with it in our daily activities. We experience it in fragmented ways, but then businesses and different stakeholders of businesses have over the years asked businesses to rethink how the activities impact the environment, how the activities impact the society, and also how well their businesses are being managed. Why should businesses be interested in ESG? How then can businesses who are interested in ESG take the necessary steps required to be able to incorporate this ESG into their activities? It is for this reason that UKGCC has collaborated with KPMG to share these thoughts from our experience and practice with members of the UKGCC and the general public. I'll be joined by Mr. Kwame Sapombanie, who is a partner for KPMG's Governance, Risk and Compliance Services. He has consulted for over 21 years in audit and advisory services. He provides leadership in a wide range of service lines, and that includes financial, operational, and performance reviews, enterprise risk management, sustainability assurance, and a good number of areas that are related to ESG and sustainability. He has facilitated similar sessions on both ESG and related issues in Ghana and also on the international front. He's a certified public accountant and he has an executive MBA from the Penn State University. Ladies and gentlemen, without wasting much time, I'll hand over to Mr. Kwame Sapombanie, who is an astute ESG professional, to take us through our discussion on ESG considerations and why it matters.
Thank you, Ken. Thank you all for joining. So the content for this afternoon's discussion is as presented. We'll just do a quick intro of ESG and try to really get a practical understanding of what ESG is. And as Ken alluded to earlier, we need to really know why it matters to us. And if it does matter to us, how do we get it started or integrated into our businesses? And more importantly, our decision-making process, right? We will look at a critical component of ESG, which is the reporting, and making sure that you have the right view that others can look at you to know where you stand on the ESG matter. And more importantly, a point called greenwashing, which is very popular in today's ESG discourse. And we'll quickly touch on the UK GCC's role in promoting ESG. And then we'll open it up to some questions and answers so that we can all make sure that we are on the same page with regards to this discussion. Before I start my presentation, there's a short video that we have here that we want to watch, and after the video, we can go on to the discussion. Thank you.
The world has changed, and it's not just because of COVID. Consumers and employees have increasingly different expectations of the world and the businesses they buy from and work for. Your shareholders and lenders are under pressure from regulators and the market to prove that they're acting responsibly and investing sustainably. All will be making choices about which organisations they work with. So will yours be one of them? Each stakeholder looks at your business through their own lens, and this is your opportunity to choose what's behind it. What is your impact on our planet? What do you contribute to the communities you operate in? And how do you conduct yourself? ESG isn't something you do, it's everything you do and how you do it. It's your license to operate and it's your opportunity to lead. Your ESG strategy must be authentic, embedded in your business strategy and owned by your board. Your ESG narrative looks right across your business and tells that story to the world. And your ESG metrics help people compare you with others, often via a rating. You'll want to consider how you conduct yourself as an organisation and look to the ethics throughout your supply chain. What part do you play in the community? Is your business inclusive? Are you well governed? And is your leadership diverse and set up to hold the business to account. Look at the impacts of climate change, the natural resources you consume, and the waste you produce. Do you pay fair taxes? Treat your customers and suppliers ethically? And do your employees have safe, fair working conditions? And could they speak out if they see something wrong? Understand where you're strong and can be proud. And know where you're vulnerable and then have a plan to make it better. People will expect you to set clear targets and have the data to measure your progress and report it to the world. They'll want the assurance that what's behind the curtain supports your performance and won't let you down. Your metrics will encourage investment and your narrative will talk to your stakeholders. When you're done, you'll have a resilient business set to thrive in the new reality, and you'll be playing your part to make the world a more sustainable, fairer, and better place for everyone. It's the right thing to do.
So I'm quite hopeful that all of you had the video quite clearly. So, I mean, as the video alluded to, ESG is really a way that organizations must look to combine profits with purpose, right? And the lenses that it looks at is environmental, which is really the impact that the organization is making on the environment that we live in. And social is really the contributions that are made in communities that we operate in. The governance piece is what brings the two together, which is a license to operate, basically how you do business, how you are structured as an entity. So look at this whole ESG thing, environmental, social, and governance. The governance is the bedrock for the E and the S. And at the end of the day, the critical thing that must be noted in this point is that research, I mean, two fundamental points. The research proves that entities that practice ESG, or at least at a medium to advanced level, are more resilient when it comes to shocks. And then more importantly, another point is that entities that practice ESG have a better or robust understanding of their risk management or their risks that they face. So they're able to better manage challenges that they face, and also identify opportunities that are around their businesses. I mean, in line with their strategy, obviously. So ESG generally is a process that has been put in place, or that is being recommended for entities to adopt, to help them really have a depth of insights with how to do responsible business, right? And so it's a mixture of purpose and profit. So not just assessing an entity only from a profit perspective, but also looking at what impact you make on the environment and what sort of impact you're making in your communities, and also how you do business, how well you're run. This is the governance piece of it. Why does ESG matter? I think it's evolving, and it's a topic that I'll be surprised that you don't hear in any important business meeting today. I mean, there's a CEO survey that we conducted in 2021. And it's interesting to note that the top 5 issues that came up were all environmental and social issues: extreme weather conditions, climate action failure, human environment damage. ESG is really a big point. CEOs across the survey that we conducted explained and told us that environmental and social issues are the heart of what they think about. And obviously, the governance is the basis with which they need to go about to deal with these things, to ensure sustainability and to also ensure that their profits are generated in a responsible manner. What is driving ESG? So in today's business, it is clear that ESG is at the heart or at the center of boardroom agenda discussions, and is influencing many business strategies because of the mere fact that employees are expecting to work with companies that have meaning and purpose. not just a company that can pay me, but a company that will treat me right, treat me fairly. Customers and our supply chain agents are also looking at us to say that, are we responsible entities? And they're looking for entities that are responsible, that understand how they impact society, understand how they impact the environment to work with. In the investor phase, it is clear that investors are making loads and loads of capital available for companies that are ESG aligned. So from a capital perspective, which is an investor perspective, and now even more importantly, regulatory bodies are continuously issuing standards to promote ESG because it is the right thing to do. So these are some major drivers that we see for ESG. Now, just to be a bit specific, just in Europe and in the UK for now, you can see that even in the UK, there's a task force for climate-related disclosure, which is just asking for information to be disclosed. I mean, most of the points that I laid out here, again, corporate sustainability reporting directive, continuously businesses are being asked to disclose how they do business. Businesses are continuously being asked to demonstrate critical things such as how they are ensuring that they're not greenwashing, how they are ensuring that they are being a fair employer. And these are all standards that are coming up. In our local context, if you look at Ghana, for instance, one of the major points I want to point out is that our recent downgrade that caused a lot of, maniac for us around our bonds and everything was actually influenced by our ESG rating. Ghana was downgraded by both Moody's and S&P fundamentally because of our ESG standards. And this is something that entities are not really picking up on. Interestingly, Ghana launched, the first financing roadmap, globally for SDGs. And it's really just to ensure that as an entity, as a country, we are intentional and we understand how we are funding these SDGs. On the enterprise level, it's quite strategic to note that Bank of Ghana, for instance, has issued the sustainable banking principles, and that these banking principles is what's going to guide banking, effective 2024. So banks need to really get up to speed internally as to how they operate, and also with the customers that they deal with. The Ghana Stock Exchange, very strategic, has also issued out some disclosures that ESG disclosures that their member or listed entities must adhere to. Again, this is it's not mandatory at this point, but it's quite comprehensive if you look at it. Interestingly, we as KPMG we conduct some surveys pre-budget, annually. And the 2023 one, we noted that a lot of the stakeholders that we engaged are talking about illegal mining affecting their businesses. And it was interesting to note that all these are critical things that affect the environment. So ESG definitely in our local country is taking shape, and we are very confident that it's something that will become regulators will really move strong to assist entities become compliant and really embed in the businesses they do. Values for companies that adopt ESG. I think I've mentioned a few of them already, but again, access to capital and investment. There's a load of capital that's being made available internationally for entities that can demonstrate that they are being responsible. I made a point earlier about companies that mature in ESG definitely do have a deeper understanding of the risks they face, and therefore are more robust to face any sort of shocks or challenges, right? The other point is on your customers that you deal with and some of your key stakeholders like your vendors. They see you as more responsible, and increasingly entities that have more power will be demanding that you as an entity demonstrate how you're being responsible. So again, from a value perspective, I think all these interact, and I've already mentioned some of this, so it's definitely the right thing to do. So now that we know that ESG is important to us, it has tremendous value to our business and actually improves how effective we can be as a business. How do we practically move the agenda? How do we make sure that we integrate this into how we make decisions and actually how we run our businesses on a day-to-day basis? Generally, what we've seen is that there are four main challenges that entities face when they look at ESG. The first one is probably around governance, right? Because everything starts with governance. And as I said earlier, for the environmental and the social, for it to work, it's hinged on the governance. So do we understand who does what for ESG to work? And does the people who make the decision have authority understand what roles they have? That's number one. So governance is huge. Data. I don't for a second believe that data is not available. Data may be available, but the challenge is that it may not be in a way, or we don't even understand the data that we have. So data is something that I think becomes a challenge when we want to clear up this whole ESG journey. Now, strategy is also a big one. Most entities have already developed their own strategies, or they're already on a direction that they're going, and I tell them to take a step back to optimize their value through profit and purpose. So this whole strategy thing now becomes, they have to rework it. Now, reworking that strategy is something that is not always, because the experiences that you need to even point out what to look out for, what to report, becomes a challenge, right? So strategy development becomes one key challenge. Now, the fourth point about the challenges is the disclosures. I mean, ESG has had a lot of regulatory standards and all requirements, but thankfully, I think these disclosures are now being standardized, and we all will have some common frameworks to adopt to make sure that our disclosures are consistent. It can be understood by everybody, like accounting standards, so that there is no ambiguity with regards to what we are looking at. Now, how do we propose we integrate this? We have it through a four-lens journey. So from a foundational level to a cutting edge or leading edge, base, which is where it's mature, right? The process goes through diagnose, strategize, transform, and inform. And the key activities around the diagnosis is basically conducting a materiality assessment around your ESG. So what are the critical things you do that impact social environment? And from your governance perspective, what are the key material, what are the key things you have? You need to understand that. Once you understand the material issues in your industry or in your entity that's peculiar to you, that gives you a view on how to strategize. How do you address these things? So how do you address these key elements? And then you move to the strategize part to say that, what do I do to ensure that I become more responsible? What do I do to ensure that I run my company better? Who do I communicate with? Who are my stakeholders? How do I impact them? Once you know that, it's now about developing internal policies and procedures to support these ambitions that you set for yourself in the strategy. And that's the transform part. There's a lot of getting used to the process in this phase. This is probably the hardest phase, where you're actually trying to implement the policies that support the different things, trying to get the data sources to analyze and generate outputs. So this is where you need a lot of change management and a lot of training and a lot of clear goal setting to make sure that people can not just report things for reporting's sake, but actually practice what they report. And the last phase, which is the inform phase, this is where you're mature than that. You've kind of even bring in a third party to do some sort of ESG assurance. So you can bring in like a KPMG or any other assurance provider to come and say that, okay, these were the standards that I started with to comply with. Can you assess from an independent perspective, have I been able to achieve these things? And then report it independently to my stakeholders, right? So publishing your reports and making sure that these information can be relied on. It's not that you just saying it, but people really can believe and rely on the information that you're putting out. So again, the process is a 4-journey process that we've proposed. But again, a lot of this can, but the first phase, as I said, is the materiality assessment, knowing what is material to you, coming up with a strategy, note how you do this, and then building the internal policies and procedures and the capacities, individual people, roles and responsibilities to adopt them. And then more importantly, move into the inform, which is where you disclose, and more importantly, perform an assurance to ensure that there's reliability on the information that you put out. Now, ESG reporting, or the reporting standards, is one that is very, very important. And as you've just heard me talk about, once you are at the advanced stage, that's when you report. I'm going to start off with a video, just so we all listen to it, and then after the video, I'll continue with my presentation. Thank you.
Have you assessed your company's readiness for ESG reporting? A strong reporting strategy helps you tell your story to all stakeholders. If you're not telling it proactively, the raters, indexes, investors, and the marketplace are going to tell it for you. Demonstrating credibility to your stakeholders is important to meet investor expectations, remain competitive, and lead among your peers. Understanding where you are on your journey is key to being one step closer to meaningful reporting. When we think about a company's ESG journey, we think about it through the following phases. Establish your reporting strategy to meet the demands of the regulators, your investors, and stakeholders. Assess by gaining an understanding of how your governance, processes, and controls stack up against leading practices. Design and implement best practices to drive rigorous and timely reporting. Sustain the quality of the data through ongoing monitoring and testing. Assure timely and rigorous ESG reporting. No matter where you are on your journey, KPMG is prepared to help you with your sustainability reporting. Find out how. Contact us, your ESG Advantage, KPMG.
So KPMG, definitely your ESG Advantage, right? Basically, to get to the reporting stage, it's quite an advanced stage. It's a stage where you want to tell your own story, as the video that you just said. Because if you don't tell that story, assumptions will be made, and people will tell that story for you. And you really need to lead your pack. And interestingly, there's a lot of disclosure, frameworks that are out there. But thankfully, I think the Sustainability Accounting Standards Board just issued a standard, which is really trying to standardize all these standards that are out there. GRI was a very popular one, the Global Reporting Initiative. But if you look at what the ISSB has done, they've taken all these standards and standardized it through some sort of an IFRS 9 standard. So IFRS S1 and IFRS S2 are sustainability standards that are going to come into effect in 2024. So if you follow these standards, they will, in essence, they are rigorous in the sense that they've encapsulated all these various standards that are out there. So this IFRS S1 and S2 are standards that have just been published actually just last month, and these will definitely help entities who are ready to report on that reporting journey. Now, what are some of the challenges in report? I think a lot of it was said in the video and even earlier, but the first one is data. I say reliability. Availability, I think, is not our problem. Typically, we lack the governance around, we lack the data governance structures. We don't know even what data to capture and how to use it and what to use it for. So really adopting a data governance framework that will enable you to generate the right data is something that is important, right? Now, reporting frameworks that are not consistent, I think now with the IFRS standard that is out, it will make it a bit easier for all of us to adopt something. And again, as an entity, you need to really do an assessment to really determine which one you want to adopt. But if you're going to be an IFRS compliant entity, you may have to go with the standard that just be, again, this will be effective in 2024. I mean, there's complexity in selecting the scope, and that's why the materiality assessment that I alluded to earlier is important. You can't report everything, but you need to know what is important to you as an entity. If somebody looking outside looks at you, what are the critical social or environmental issues that they will report? What are some of the governance pillars that you have that make you relevant to your stakeholders? And you need to note that to make sure that you know what KPIs you're putting out there and you're following the standards that you choose to adopt in your reporting. Greenwashing is a term that we'll go through it, but it's basically reporting things a bit too ambitiously or reporting things that are not so accurate, right? Sometimes entities who are not so mature in the ESG process tend to do that. And sometimes it's not intentional. It's just lack of having the right frameworks and having the right structures in place. So they intend to say things that are a bit blown or not even very specific for people to really align with. And that's greenwashing. So we'll deal with that very shortly. Reporting guidelines, as I said, are not always mandatory. If you look at the SEC guidelines that has been put out now, it's not mandatory, but as we are maturing, it will become mandatory. If you look at the sustainable banking principles, banks will have to adopt it. So that mandatory process is going to catch up with us very, very shortly. And this is why we need to make that decision today to move forward with our whole ESG strategy, which encapsulates the ESG reporting as a mature phase of the journey that you would have to go on. Now, what is a clear path for this? I think most of this I've said, but let me just kind of go through this in terms of reporting best practices. I think is linking your sustainability principles to your overall business strategy. If the business strategy is not driving this, it will be a checkbox exercise, and that shouldn't happen. We have to set measurable targets, things that we can measure. And this is why when you do the materiality assessment, you must be very clear as to what is important to you and what is the standards required, and therefore what you can report. You need to identify the relevant stakeholders and involve them. You need to understand what they want to look at, what they need from you. We must be very clear in language, and this is what the greenwashing comes in. Sometimes the language can be so ambiguous. We need to make sure that we understand what we are reporting and that we say it clearly. Context in every conversation is important, right? So we need to give the right context and demonstrate that how our performance is against the benchmarks. Third-party assurance, I said earlier, it gives you that credibility. It gives you that credibility that you still set up to do something. A third party who has the rigor, has taken your process through some methodology and understands and can put out a factual statement that, yes, these things that are being reported are accurate and you can rely on them. The reporting frequency must be consistent so that it supports what stakeholders are looking for. So again, this is a simple framework that entities are recommended to look at to support the mature stage of reporting ESG benchmarks. Greenwashing, the big one, as I said, is not always intentional, right? And it's because as we are eager to put things out there, as there's a lot of demands on us, if we don't start early to mature the process, there's a lot of change management in this, we'll sometimes be caught up And greenwashing is very dangerous because it hurts your reputation significantly. Sometimes it's unintentional, and I want to think about it. It's basically when you try to convince the public of things that you are doing, but then the information you are giving out there is not clear or is a bit misleading. And if you get to this stage, it's very dangerous. Some also do it intentionally, but as I said, I want to assume that it's not always intentional. How do you avoid it? Again, you have to be quite clear in your language. Vague language is what sometimes hurts us. Green products versus dirty companies. So what this means is that you put out an output that is green, but internally your governance is broken. How you actually generate these things are broken. That's greenwashing, because what you put out is a reflection of who you are. Suggestive imagery, basically just echoing things that look green, but you are really not it. Irrelevant claims, making big statements that you can't support. And again, a lot of these things will go away if you adopt the assurance process, because your assurance partners will tell you what to remove, what can be substantiated, and all this. Best in class. I'm using big words like this. Best in class. Best in class against who? Who determined that best in class? So choice of words in reporting is critical. This whole process is a journey, right? And it's a journey that we must have recognized that as we go on, we need a lot of change management, a lot of maturity. So greenwashing is something that we must, by all means, avoid. Otherwise, the reputation, the damage, or the damage that we suffer is really very difficult to correct. So what are we saying that the UKGCC should consider? Basically, this sort of mediums that we are on, I mean, sponsoring sessions like this to really make sure that participants get initial awareness. I'm confident that for most of you that have joined today, wherever journeys that wherever you are on your journey, you find some useful information to support or to propel that journey. So this sort of advocacy is important. I think we must have intentional policies for our members to ensure that they adopt it, and guidance. As I said, change management is huge. I mean, ESG is something that is not necessarily new, especially when it comes to the environmental, the discussion, but the whole governance piece and the reporting and everything can be quite onerous, and that to really inculcate it effectively and to report it boldly, something that would take time, and therefore policies are important. Engagement with regulators to ensure that they have regulations that can be adopted effectively is important. Education, and then what gets monitored gets done. So tracking what is monitored is also a critical way to ensure that entities that we play with or we set as stakeholders are able to mature on this journey. Let's watch our last video.
When it comes to ESG insights, our team is ready. We use tools and skills to navigate your business forward. Revealing new opportunities for a better world. Because how you grow matters.
I think for the discussion this afternoon, is basically just telling you what ESG is, why it's important, why it's evolving so much, and we've given you some guidance on to how to integrate this whole process into your your maturity scale, and then the last part is how you do the reporting, as it's going to become mandatory very soon for a lot of businesses. So this in a nutshell is what we've discussed with you this afternoon. So I'll pass it on to Ken, the moderator, to take us from here. Thank you.
Excellent points and insights shared out there, Kwame. And then when you got to the greenwashing part, I remembered that I have a background that is green, but I'm wearing a brown tie. So if I touted my green credentials, I'm sure I would have fallen foul to the suggestive imagery part. So those were very insightful sessions that were shared. Kwame has just taken us through a journey of ESG, what it is. Now we are aware that regardless of the kind of business that we do, we should be worried or should be concerned about the impact it has on the environment within which we operate in. Now, how about the society or the communities within which we operate, the people who work with and the ones we work for? How do our business impact them positively? And then the bedrock of the entire ESG discussion that happens to be governance. How well is our business being governed? It is for this reason that you find businesses who are supposedly being or touted as green, manufacturing equipment that are solar powered and all that, but then they end up getting not so favorable ESG ratings. It is because sometimes some of these businesses are not well run, or perhaps their social ratings as part of the entire ESG ratings are low. They are not relating well or taking care of the people they work with and all that. So Kwame, thank you so much for taking us through this session. So I have a few questions that I would like to share. I would like to ask so that you share some thoughts and insights on. So for businesses who are with UK GCC like this, some of them have not, some of them do not have any ESG policy at all. They do not have any guideline, strategy, or anything at all. How then do you suggest, or where do you suggest they start from so that they can begin the journey to also assist with the UK GCC's advocacy for businesses to be green and responsible corporate citizens?
So Ken, thank you for the question. I think is a good one. So basically, the first step for me is that the business, especially the leadership of the business, must recognize ESG as something that is beneficial to them, and really have that value proposition to recognize that balancing profit and purpose eventually builds a better business, right? So that's the first step, because if that belief or that value proposition is not clear to everybody, then there's always a mixed feeling as to how to go on this journey. So once you cross that bridge, then the next step is going through that journey that I spoke about in terms of the maturity journey, doing the materiality assessment, and everything starts with leadership, right? If the governance is right, where the board and senior management understand why ESG and are ready to invest in it, do the materiality assessment, go through the process as to knowing your current state, where you are, and then making the investment to adopt policies and procedures to make sure that you're able to live consistently with regards to the things that you are aiming to do. And I think I've said it repeatedly that change management is crucial, because it's a journey that you would have to be very, very clear about, and you have to commit resources to, and it will take time. And as you are gaining towards the maturity, set clear targets alongside the standard that you are adopting, so that it can be assessed objectively. And when you put something out, your stakeholders will know. But you must also note what your stakeholders are looking out for. You cannot put out what are not relevant to stakeholders. So in that materiality assessment, one of the critical steps is to really note who your stakeholders are and what is important to them. Thank you.
Excellent point there. So to our participants on this webinar, the Q&A part of the app is open. You can post your questions, your contributions, and all that in there whilst we move on. So I'll take them as and when they come in. So there's a question on whether specific courses are available for cybersecurity. Right. So Sam Diamante will take care of that. So Kwame, I'm having taken us through what people who are yet to begin the journey can do to be able to start off with the journey. There are people who are still thinking, yes, I'm here to start with this journey. I entered business to make profits. Now I've joined this UKGCC who have organized this session to say business shouldn't always be about profit, but then it should be profit with purpose. So how then do people strike the balance to say, yes, I'm chasing all the profit that I need to chase, but I'm doing that with a purpose to say, yes, my business is making me money and also making sure that I am a responsible corporate citizen within the jurisdiction that I operate in. How do businesses strike that balance?
Yes, Ken. So that's also an interesting question. So basically, I mean, what is purpose, right? Purpose is basically looking at something bigger than just what is immediately available in front of you, right? And in the lens of a business, purpose is really making sure that employees will see meaning in the journey you are going, that your customers or your stakeholders will see that you are different. So if I'm an employee, for instance, and I'm choosing between entities that have do the same things. The question is, why would I want to go to one versus the other? One may be that the leadership is ethical, the culture is ethical. If you can be bold to say that I do things ethically and responsibly, I have a balanced board, my management team is diverse. These are things that people are looking for, right? And if you're able to do these things, you drive more meaning for people. You drive more meaning, and again, every business will only survive if you get your purpose right. I mean, sustainably, because you can make profit in a short term, but the question is, how are you making that profit? Are you making it in a responsible way? And if people start to judge you, and they judge you that you are different for a reason that can be measured in money sense, then you've achieved something. The second point I just want to make quickly is that practicing ESG, I made this point earlier, it really helps you understand your risk dynamics. So once you are heightened in understanding what you're faced and the opportunities that are around you, you make better decisions. Your decisions are richer because the ESG methodologies forces you to really delve deeper to understand how things are done. So you break things down a bit more granular and your risk awareness goes up. So you're able to identify opportunities better, and you're also able to see challenges where you can put in strategies to mitigate it. So you have a deeper understanding of how your business operates. Thank you.
Excellent point there, Kwame. So there's a question from Lilian Kakari, and it goes like this. When your company operates a CSR policy that touches and concerns environmental protection, community development, sustainable purchasing, and respect for people at work, can one say such a company is ESG compliant?
So I think there's a lot of components in there that, support, ESG, but that alone is not necessarily going to be, ESG compliance per se. But again, doing things in a responsible manner by making sure that you deal with the right vendors, making sure that you follow the right policy. All these things are very, very good things. But for ESG to be comprehensive, you need a holistic strategy that's aligned with your overall strategy. There must be intentional KPIs that you set that you can benchmark yourself against and report effectively to stakeholders. So yes, that in itself is a component of ESG, but that in itself alone is not necessarily, I wouldn't say will give you a matured ESG platform. Thank you.
Thank you. So the follow-up question from Lillian is a company then supposed to transition from CSR into what we now refer to as ESG? So then she would like to know if there's a difference between the two and if one has to be subordinated under the other and then we're expected to grow to mature as you alluded to. What's the difference? And is there the need to transition from one into another?
Simple answer is yes. And the how to the yes is basically taking that CSR policy to make it more strategic. That's number one, right? And what do I mean by that? What I mean by that is to align it with how you do your core business. So what is your core business, and how does your core business impact society and the environment? From a governance perspective, how are decisions made? Are you looking at all the critical components around governance? So I think you have to mature this CSR policy into a full-blown holistic ESG journey. So yes.
Right. So I'll pick your mind on one thing you alluded to in respect of Ghana's credit ratings by the international rating agencies, for the fact that ESG was very key in the decision that was taken to downgrade Ghana. Now, one of the things they cited was the fact that some business activities in Ghana are threatening, one, the agricultural economy or the agricultural value chain, in the sense that lands are being destroyed, sources of water are also being destroyed, and for that matter, people will not be in a position, or the country will not be in a position, to grow as much tree and even plant crops for, one, consumption internally or domestically, and also for exports. How then can businesses who are gathered here as members of UKGCC, NGOs, and other organizations collaborate with the government to also help drive this ESG agenda that we are all pushing, so that in the future, our credit ratings that could stand a chance of being impacted by our ESG credentials will not be as badly affected as happened to us earlier last year? How can that collaboration be fostered among all these key stakeholders?
So Ken, this is a big ask, and I think it's an important one, because when the country was downgraded, it affected every single person. I mean, I'm sure everybody, most of us on this call, felt it some way, somehow. But the downgrade has major implications. I mean, thankfully, we know that ESG is a critical factor for credit rating agencies. So that's the first lesson. So if we're going to take this lesson well, and how do we collaborate? I think major regulators, like what SEC has done, like what Bank of Ghana has done, must take up the charge to put out standards for entities that are relevant to them. Entities, on the other hand, as we are having discussion on this, do their own internalization of why ESG is important to them, and come to that answer that ESG is a critical mark. So if they are in a related industry that has these standards, it's easier for them to adopt, because for them it makes sense to align purpose with profit, right? In terms of government as a whole, I think government policy should also be targeted to addressing these ESG standards, because if it doesn't, we'll continue to fail on that arena. So I think it's a three-lens approach. Major entities or all entities must embrace it. Regulators, who typically are able to drive some of these changes more effectively, and government policy must also be in sync with all this. So I think these three components must come together to ensure that we as a country don't suffer major downgrades because of ESG ratings.
Right. So that was a very insightful exposition there from Kwame. So in respect of seeing ESG as a compliance activity and as a practice that adds value that adds value to what businesses do, what kind of advice do you have for businesses and individuals on this webinar? And what should they focus on? Should it necessarily be the fact that there are regulations or there are sanctions that are available, so we are doing what it takes to avoid sanctions or penalties, or investors are on our net that before they can give us money, we should be able to show or prove something to say we are practicing responsible businesses and all that? Should it necessarily be about complying to the demands of these key stakeholders and regulators, or it should be something that's strategic with the aim of improving the businesses that we do to make sure they are sustainable in the long term?
So yes, I mean, compliance as a word, or is not always what drives the DNA of a business, right? So I think a regulator, could put out a directive or policy or guidance or whatever, but you as a business, you must work above that directive or regulation, right? And for me, any business that is just looking for compliance could be making a mistake, because then you're just checking the box, say that I've done this, I've done this, I've done this. But you must see it as a part of how you do things. And that's why we keep talking about doing the materiality assessment and embedding it with your strategy. It must be real, and people must understand it. It shouldn't just be a topic that some intelligent people within the company are just discussing. It must be something that's practical to every key decision maker. So compliance alone is not going to cut it. It has to be within the DNA of the business, and it has to be something that drives strategic value for the business that can be measured. I mean, it may not be short term, but at least in the medium to long term, measured to see true value, I mean, for the business. Thank you.
Excellent. So I'll read this contribution from one of the participants, and the person says, I don't think CSR necessarily has to transition to ESG. They can be two separate entities. I believe CSR is a small aspect of ESG, rightly said. So there's also a question from Michael Edijamfi that goes to say, in your experience, do you consider the current sanctions regime in Ghana with respect to land degradation and other related environmental issues? Do we have a robust sanctions regime that actually takes care of people whose activities commit a lot of harm to our environment in Ghana? That is the question from Michael Edijamfi.
Michael, interesting question. I don't think I'm super qualified to answer questions around sanctions on land use. I mean, what I can say is that, as Ken pointed out, ESG, and particularly around how, as a country, we are dealing with our land, agriculture, mining, is one critical pillar why Ghana was downgraded, right? And it's affected all of us. So, I mean, as a country, as we just alluded to earlier, we need to take this seriously, because if we don't take it seriously, we'll lag behind. And more importantly, a lot of our future will not look good. So for me, I don't have the view on the sanctions for land usage and all that, but I can tell you for sure that we need to take it seriously and move in a positive direction to ensure that we protect our land and natural resources. Thank you.
Right. So I think I'll read this last question and then we can get back to our partners, UKGCC, to take it off from here. So someone is asking, how can shea butter processing lead to greenwashing? And I think I can share thoughts on this for the participants. Shea butter processing by itself may not lead to greenwashing. But then if you are doing something that is not green, if you've just, let's say, installed one solar panel and you are all over the place letting people know that you are engaged in sustainable business practices, but then your business is being badly run, you are not taking good care of the people who work for you, the safety, health, and environmental situation around even your processing plant or where you get your work done is not being done right, then you may be engaging in greenwashing if you come out to tell us that indeed you are processing shea butter, but your practices do not necessarily foster an environmentally sustainable business, right? Thank you. There's something from setting agenda on diversity, including like LGBT related issues. US says Africans all in the name of ESG, which is against our beliefs. I think the question now here is how well do we deal with that? Should it be a cultural issue? Are there cultural inclinations or are there cultural considerations to all these ESGs, particularly under the S pillar, where we get to tackle issues under diversity, inclusion, and equity?
Ken, is that a question for me? Because I mean, you were breaking up a bit.
Right. So Georgia Takofi asked a question on a big push from the Western nations on some specific diversity and inclusion issues that are quite rife over there. And he's asking whether I mean, some of these things may necessarily be against our beliefs and culture as a people. So then when people are attempting to, let's say, incorporate ESG into their activities, should they really do it on a wholesale as people do it everywhere, or they should really consider, I mean, the cultural implications, or I mean, there should be some cultural considerations when people are talking about ESG, particularly under the social lens where there's diversity and inclusion?
So I think the good thing about ESG, as we've said it, is that you have to be intentional about the journey you as a business want to adopt. At the end of the day, an ESG strategy in company A will not be the same as an ESG strategy in company 2. So you must be intentional and make sure that whatever journey you adopt aligns with how you want to do things and what you want to do. So I think there's a choice that entity or the key stakeholders in the entity, let's say shareholders and the board, I mean, there's a choice that they must make as to what is important to them. So I don't think anybody can necessarily mandate for you what to do. I mean, there's still a lot of flexibility around how to choose this whole process. Yes, I admit that there are some standardization around that diversity and all that, but I think there's still a lot of intentionality and a lot of choice that can be made.
All right, Kwame, thank you so much. So I think at this point, we will hand it over to our UK GCC partners who have made it possible for this insightful session to be delivered by Kwame, who is also an astute ESG professional. So, Sarah, we'll hand over to you. Thank you.
Thank you very much, Kenneth. And thank you so much, Kwame, for that insightful presentation and for answering our questions. We are so grateful to have all of you, our participants, to this afternoon's program. Would like to remind our participants or everyone that this is just the first in the series of our ESG webinar series. We, as a chamber, we have teamed up with KPMG to bring at least four of these sessions to you. The next one, we will be discussing into detail the environment, and then the third one, we will discuss the social considerations, and then finally the last one, we will look at the governance issues or the governance considerations under ESG for business. And at this point, I'd like to just say a little bit about the UK Ghana Chamber of Commerce. So the UK Ghana Chamber of Commerce is member-based organization, is a bilateral chamber of commerce. We promote bilateral trade between Ghana and the UK. KPMG is a proud member of the UK Ghana Chamber of Commerce. And one of the things that we do, our work centers actually on networking, capacity building, and trade services. And one of the things we do under capacity development is to drive thought leadership on the very, very important things, especially those topics that, matter about our future, as citizens of the earth. And so we are happy and proud to bring this webinar to you this afternoon. Please follow us on all the social media handles. We are on Twitter, we are on Instagram, we are on Facebook, we are on YouTube. We have a lot of videos on so many interesting webinars that would actually help your business. Please follow us, and then as well as we also, as I mentioned, we are a member-based organization, and so we are happy to welcome all of you. Please drop us an email. We'll send you the guidelines, we'll send you the requirements for membership, and then we can all enjoy the fantastic benefits of joining the UK Ghana Chamber of Commerce. Thank you so much again, everyone, for coming. I am speaking on behalf of the Executive Director, Ms. Ajoba Chiama. Thank you very much, everyone. Bye-bye for me.
Bye-bye.